you guys for coming, and we're going to talk today about financial literacy. Why is financial literacy important? Well, as college students, you probably are incurring some debt. Unfortunately, by the time you graduate, the average student loan debt is $29,800. 69% of students take student loans. In our adult population, there are 43 million people who, that's 1 in every 6 adults, have student loans. There's a $1.5 trillion student loan debt in our country. And the really sad part is people my age, 62 years or older, owe $67.8 billion in student debt. And so I don't want you guys to end up at my age and have a lot of student loan debt. And so part of what we're going to talk about is that, but the overall picture is on financial literacy. So you will see that we are online using this inventory right here, financial literacy inventory. For our students that were already in the program, you've never gone through this. For our new students this year, they are actually completing this online. Former students, if you're interested in this, you can come into the office and we have paper pencil copy like this that you can actually do to get the information. So, okay, we're going to try to go back and forth between the paper pencil copy and the online copy so that you know what it's like to do it. So let's go to the online first. As you can see, I have brought this up online and I have entered in underneath my name. And here we go. There's a series of questions that you would answer, and then at the end, 6 different areas, and then at the end it gives you a score in each of the 6 areas. Then when you open the financial literacy inventory, you'll see the quiz questions on the paper copy here. They're replicated up there. Step 2 is then to score it. When you open it, you'll see in these 5 areas are suggestions on what to do to either get your finances under control or just learn more about it. So the 6 areas that we will cover on here are income and careers, something I know you're all interested in, banking and budgeting, credit and debit, saving and investing, and rights and risks. So if you're in the workshop going through with us right now, you have a paper copy in front of you to go ahead and complete as we go through it. I will go through it online also. First question, taxes, Social Security, and insurance affect your take-home pay. True or false?
True.
2, there's never a fee to use an ATM. True or false? 3, all forms of debt should be avoided. 4, the annual percentage report or annual percentage rate, APR, is always higher than the APY, annual percentage yield. 5, the federal government insures most bank accounts. And 6, you're legally required to have auto insurance when driving in most states. Let's see if it will let me go on without answering. Oh, no, it will not. So we'll have to answer it together. So the first one, true. Is there a fee for using an ATM? Yeah. If you're using your own, no. But if you're using another bank's, yes. All forms of debt should be avoided.
No.
No, you have to have debt. Well, I guess you don't have to, but most of us incur debt if we're buying a home, buying a car. The APR is always higher than the AYP. True or false for APY? I don't know, so let's guess. We'll say false. The federal government insures most bank accounts. I believe that's true. You're legally required to have some kind of auto insurance. I believe that's true. Let's see what happens. It didn't tell me, so we'll go on. Is the minimum wage the same in every state? True or false? You guys think false. Having credit is the same as having extra cash. What do you guys think? If you have credit, is that the same as extra money laying around? Well, it is, except you pay interest on it later. 3, you can lose money if it's invested in a savings account.
True. False.
True or false? We'll say true, just to see.
Okay.
The Federal Trade Commission protects your rights as a consumer. The deductible is the amount you pay weekly, bi-weekly, or monthly for an insurance policy. I think that's false. Money earned from tips, bonuses, and commissions is not taxed. I'm going to say true because I want to see what happens if I miss it. You took this already. Did you have to save at the bottom of every page?
No.
Okay, because I just realized I'm not. Okay, you should always pay off the loan with the lowest interest rate first. Should you pay lowest or highest? You guys are saying false. Life insurance is generally cheaper for those with severe health problems. I'm hearing no. The mandatory retirement age to retire in the U.S. is 65. Do you have to retire at 65?
I don't recall.
You know, in my lifetime, that was a true statement. At one time, you did have to retire at 65 in my lifetime, but that's been changed. Bad credit can affect your ability to get a job.
True.
So true. Most employers look at your credit report now. Car payments, rent, and insurance are examples of fixed expenses. Those amounts generally don't change. In the short term, it's easier to increase your income than it is to cut your expenses. Probably false. We can usually cut our expenses, not go out to eat, not buy the Starbucks, as opposed to go get a new job. Okay. If you rent an apartment and your possessions are stolen or damaged, the property owner is responsible.
No.
No, you are, and you should take out renter's insurance. It's about $20 a month. It's well worth it. Stocks are normally riskier than bonds.
Yes.
Which has more volatility, the stock market or the bonds?
Stock.
True. Discretionary income is money you use to pay bills. False. Discretionary is money you have left over after you pay your bills. So that's your fun money.
You have money left over?
Yeah. Yeah. The first step in budgeting your money is to determine your needs versus your wants.
True.
True. Your net pay will never be more than your gross pay.
True.
True. Gross pay is how much you get. If you make $10 an hour and you work 40 hours, your gross pay is $400. But then they take out Social Security, FICA, federal tax, state tax, health insurance. So you don't bring that home. I bring home about 70% of my gross. It just depends on how many deductions you have. Losses from identity theft are covered by the federal government.
No.
No. 3 years ago, they stole my husband and my income tax. They filed my income tax return. And no, the federal government did not pay those losses. A fixed interest rate on a credit card can never change. What do you guys think?
I want to say true.
You want it to be true, don't you? We're going to say true and see what it tells us.
Okay.
As long as you pay the monthly minimum balance on your credit card, the credit card will not charge you interest.
False.
No, they're going to charge you interest. They're letting you use their money. You are guaranteed a cost of living raise every year by law. No, don't we wish? Because the monthly payment will be less, you should always lease rather than buy the car. False. You can lease, and sometimes the payment is less, but you never have ownership and you never have equity. So at the end of the lease, you just turn the car back in. However, there's usually a limit of about 10 to 12,000 miles you can put on it in a year, and if you exceed that, you pay per mile and it gets very expensive. Homes usually increase in value over time.
False.
False or true? False, okay. All income is taxable.
You can say whatever you want. I'm going to say
Could
true.
be true. I hear that when I get to 65, Social Security is not taxable unless you make a certain amount, but I'm not there yet. So.
No.
Okay. A bank account can help you avoid the fees associated with check cashing centers.
Yes.
Yes. So if you go to Walmart to cash a check, they charge you a fee. If you have a bank and the check's written on your bank, generally they don't charge you a fee. You can check your credit report for free once a year.
True.
That is true, and actually there are 3 different credit reporting companies, and so you can go to myannualcreditreport.com and check out, ask for just your Experian. Then wait 4 months, ask for your TransUnion. Wait 4 months, ask for the next one. The reason why you don't want them all 3 at once is things change. When I run my credit report, I found my grown son, who's married and does not live at home, had a medical bill tied to my report. So, I call and I get that taken off my report. The next 4 months later, I ran it. My grown daughter had something that had showed up on my account because she was living at home at the time she incurred that debt. And it showed up on mine. So that's why you don't want to get all 3 at the same time. You want to get them 4 months apart. Banks are not permitted to share credit history of borrowers with other banks. True or false?
False.
Health insurance plans often limit which doctors and which offices you can go to. That is true, particularly if you have a private health insurance plan.
Okay.
In general, the more education you have, the more you are likely to earn. True. So research says that if you have an associate's degree over a high school diploma, you make about 500 more thousand a lifetime. If you have a bachelor's degree, you make about $1 million more a lifetime. Now the caveat to that is if you get training like you're an electrician or a plumber or HVAC, then you're going to make good money doing those too because you have training. Your house can be taken away from you if you don't make your mortgage payments.
True.
That is true. Money withdrawn from your Roth, individual retirement account, IRA, is generally not taxed.
False.
False. If you put money in a retirement account and you take it out before a certain age or for a certain reason, then you pay a penalty when you take it out. You also pay another penalty when you file your income tax. So you pay about a 30% penalty taking money out of your retirement account early, so try not to do that. In general, the higher the risk, the higher the potential return on an investment.
True.
True. But also you have a higher chance of losing that money. If you're fired, you automatically get unemployment.
False.
No, often you have to petition or appeal it. A co-payment is the money you pay to an insurance company for coverage. I'm seeing false. Having a co-signer decreases your chances of getting a loan.
False.
False. A co-signer would be, maybe you're just not quite, your credit score is not quite good enough to get the loan, and so someone co-signs saying, if they don't make the payment, I will do that. Generally speaking, do not co-sign for someone a loan unless you're willing to lose that money.
Yep.
Online banking is extremely risky and should be avoided.
True.
Yeah? You think? I think there's lots of online accounts. We'll see.
There are, but that doesn't make
Okay.
sense.
You should try to save 5 to 10% of every paycheck.
True.
Yes. In general, more expensive health insurance plans have a higher deductible and provide less coverage. So if you're paying more money, are you getting better coverage or less coverage? You should be getting better. You do not pay interest on purchases made with a debit card.
False.
That's true, because that's just like cash.
Oh.
Yeah.
Oh.
With a debit card. With a credit card, if you don't pay it off within a month, then you pay
Debit.
interest.
Okay.
Yeah.
I missed that one.
Money market accounts usually pay a higher interest than a traditional savings. Not sure. All right. So let's talk a little bit about that. A traditional savings account, you put your money in there, and you can get that out when you need it. Sometimes the bank or the credit union will say you're allowed to make 6 withdrawals within 6 months. They might limit you. But pretty much, it's your money. If you need it, you can get it out. Unfortunately, they only pay about 1 to 2% interest, so it's not great. A money market is the next level up. It pays a higher rate, maybe 3, 4 to 6%, but the money you cannot touch. So you can buy a 6-month, you can buy a 12-month, you can buy a 24-month. Whatever you buy, it has to sit for that amount of time. You can't get your hands on that money.
So is that the same as a certificate of deposit?
I don't know if it is or not. That's a good question. You know who we should ask? Eddie. He would know. You should have 3 to 6 months living expenses saved for emergencies.
Yes.
If you can, that is phenomenal. You should start thinking about retirement when you get your first job.
True.
That is so true. I spent 33 years as a teacher, counselor, principal in public ed. Retirement was not on my mind in 1980 when I was starting my job, had 3 kids, all that. Wasn't even thinking about retirement. Fortunately, in the state of Missouri, there's a forced retirement plan, and they started out, my first teaching job was $10,000, and they started out taking 7%, I think it was, and putting it into retirement. So I never saw that money, so I never missed that money. Fast forward 33 years later, now I've gone from principal, teacher to counselor to school principal, and 33 years have gone by, and now I'm making about $80,000, and they're holding out 17.5%, and the school district has to match that 17.5%. So a forced retirement plan was very good for me. I probably would not have done that on my own, taken out 17.5%. But now as a result, my retirement plan is I make more money not working than I was making working. because they're not holding out health insurance, they're not taking out state tax, federal tax, FICA, all that good stuff. So if you're not having a forced retirement, make yourself do it. If you can't, a lot of companies will match. They may match, if you hold out 3%, they'll match 3%. If you put in 6%, they'll match. So when you start in your career, see what kind of a retirement match they have. That's like free money. If I can put in 5 and they put in 5, now I'm saving 10 instead of 5. Absolutely do that. Okay. Self-employed people don't pay taxes. True or false?
False.
False. They have to be self-disciplined, and they usually file their taxes quarterly. So they pay their taxes every 3 months, or every 4 months, no, every 3 months.
3.
So because if they didn't and they waited till the end of the year to pay, now they've got this huge amount they have to pay. Generally safe to buy lots of stock in one company than to buy stock in lots of different companies.
False.
False.
The first
Ed
one.
is our stock expert, but if you put all your eggs in one basket and that basket gets spilled, that company goes under, you've lost all your investments. Having dependent children has no impact on your income tax.
False.
False. First of all, you get to count them as dependents and deductions. And right now, if you have children under the ages of 17, you get a $1,000 child tax credit for every child. Collision auto insurance covers the cost of the motorist damage, the other motorist damages and personal injury.
True.
Yeah? Think? Or do you have to also take out liability medical? We'll see. We'll see what it says. It's generally more costly in the long run to buy rather than to rent. I see false. I think that's false because, yes, when you buy a house, you have upkeep and you have maintenance, but you're also building equity. So more than likely, at the end of your life, someone gets some money, or you sell it and you go travel. Whereas if you've rented all your life, you don't have equity.
Yeah, and
Okay.
your mortgage payment is usually cheaper than your rent.
And a mortgage is tax deductible.
Yep.
So, yeah. Okay, 54. The lower your credit score, the better your chance of securing a loan.
False.
False. So your credit score, like I said, there's 3 credit unions, depending on the one, or credit bureaus. One of them, the highest score you can get is 850. One of them, the score highest you can get is 800. But we had a workshop on this last semester that would be online if you want to see that. So, no, you got to get your credit score up, because your car loans, your interest on your car loan, the interest on your house loan, even your car insurance, they run your credit report when you go to get car insurance, and they charge you for your insurance based on your credit report. Employers, lots of employers now look at your credit report. They want to make sure you're credit worthy. So yeah, get your score up. Okay. 401k retirement plans are retirement plans where the employer matches a percentage of your contributions.
True.
Maybe true. Not every employer does that, but maybe if you start, I don't know, we'll see. Income tax rate's the same for everyone.
False.
False. Depends on what tax bracket you're in. Credit unions are not-for-profit organizations that work much the same as banks. That is true. If you belong to Joplin Metro Credit Union, I can always get a lower interest rate there on a car loan than I can at my bank. And most credit unions, to join, like there, you pay $25 to join. You have to always keep $25 in there. So it's real easy. In general, people who set financial goals save more money.
True.
Right, because you are controlling your money instead of your money controlling you. Medicaid can help cover health costs for some low-income families.
True.
True. Medicaid is for that. Medicare is for old people like me. A certificate of deposit is considered a high-risk investment.
No.
No, it's not high risk. It also doesn't yield high interest, but it's not high risk. Okay. Click next to see your answers. All right. So we together as a class today, there are 9 questions possible in each area. So on income and careers, we got 10 correct out of 12. I'm sorry, 9. 12 correct in each area. Banking and budgeting, we rock that out, 11 out of 12. Credit and debit, 11 out of 12. Savings and investing is where we need some help, so we all need to see Eddie. So we got 8 out of 12, and rights and risks, we got 10 out of 12. So our total score today was a 50 out of a 60. next step in this inventory then, it takes each one of these categories, so the first one, income and careers, we scored a 10 out of 12, we did well on that. 9 out of 12 is considered financially literate. And then it gives you some suggestions and examples, and then some additional resources. Okay, so if we look at this one, we only missed 2 in this area. I think we got the first one correct about interest and Social Security. Not all income is taxable, correct, we got that one right. Companies are not legally responsible to provide raises. Plan ahead, maybe the 401. Plan for retirement as soon as possible. Take advantage of any 401k offered by your company. But I don't believe they're required by, in fact I know they're not required to match it. But if it's offered, do it, put some percent back. Try to put 10% back, but even 3%, just put something in, okay? Okay, banking and budgeting, we did very well on this one too, so let's just glance through here. Oh, this one. Much banking can now be done online, including transfers and paying bills. And I think that maybe we said online banking might not be safe, but I think it is. Does say that credit unions usually offer a better rate. Okay. Okay. Credit and debit, we got 11 out of 12. We rocked this category out, so I'll just glance through here to see. I don't see anything on there that would explain what we missed, so let's go ahead and go to the next section. Okay, saving and investing. Let's see if we can figure out on here. They recommend you put a minimum of 5%, and maybe we said 10. Savings accounts, like most bank accounts, are insured by the federal government up to $250,000. So you can have up to $250,000 in any one account, and it's guaranteed to be safe. So if you have more than that, you need to open up multiple accounts. Savings accounts and CDs are guaranteed investments. They don't lose money. So maybe one of the ones we missed is the money market question. Shop around for the highest interest rate that you can get. Oh, here, maybe this one. Be aware that the annual percentage yield represents how much you will actually earn on account due to compounding interest, making it higher than an APR. So maybe we have that one backwards. In general, the riskier the investment, the higher the return, the potential return. Stocks are riskier than bonds. Bonds are riskier than CDs, treasury notes, and savings accounts. Oh, look, and it tells you which question. So if you take this on paper, you can see which question it is you missed. I just saw that right here in parentheses.
Yeah.
It tells you which question, yeah. Homes are usually a good investment because they appreciate over time and build equity. There is no mandatory retirement age now. Take advantage of 401ks and IRAs. Okay. Okay, last area is rights and responsibilities and risks, and we did really well on this area too. I like the first question. The Federal Trade Commission and the Better Business Bureau, if you have a problem with a company, you can file a complaint with them, and then they will investigate that for you. Medicare is elderly insurance. Medicaid could be for those injured on the job. If a parent dies and you're under the age of 17, things like that. Unemployment insurance is provided to people who have lost their jobs, but you can be denied it for several reasons. My husband actually lost his job and they denied it. We had to do an appeal, go before an appeal board, and then he got his unemployment. Identity theft is not covered by the government, so make sure you're changing passwords. Insurance, let's talk a little bit about that. So the amount you pay is called your premium, not your co-payment. You often have a deductible. When you're buying your health or your car insurance, your house insurance, if you can afford to have a higher deductible, take it. Normally, your premium is lower the higher deductible. So if you can't come up with $500 if something goes wrong, they take a $250 deductible, so. You have to be careful using that insurance though, because if they raise your premiums if you use it, so you have to weigh that all out, so. If you have, let's go to the auto insurance one, you have to carry liability, comprehension, and collision. In some states, only 2 of those are required. You can carry insurance just on the other person's car and their bodily injury and not carry it on your car. But if you don't carry it on your car and you have a wreck and it's your fault, then you're out of car. So, and then comprehensive is stuff like someone breaks into your car, your windshield breaks. It's anything that wasn't involved in an accident. Okay, most states do require it, but some just require liability and medical and not comprehensive. So, life insurance is paid to your beneficiary. Make sure you have a will in place. I know you guys are really young now, but make sure you have a will and a power of attorney in place. If you do not, it has to go to court, to probate court, and fees get assessed and money gets taken out of your account until they figure out who should get those resources. Okay, then step 4 of the FLI is to plan your financial future. So here are some boxes that you could check. Yes, I am doing these things now. No, I am not doing these things now. If you're not doing them, they are good things to be doing. So for example, this one, I pay all of my bills on time. That counts for 30% of your credit score. So if you miss a payment, it drops your credit score pretty significantly. That's the most important thing you can do to get your credit score up, is to pay your bills on time. You can look through the rest of these. I have health insurance. I know that's a big problem for lots of people. Having goals, saving 5–10%. Then you can go down and set your immediate goals. What's something up here that you're not doing right now? So something you could do right now. Then what is something you could do over the next few months as a short-term goal? Then thinking long-term, after I get out of college, what are my long-term goals for my finances? Do I want to own a home? Is there a certain type of car I want? Do I want to be debt-free? What are my goals for the short-term and the long-term? And then the next page gives you a summary of your results. Oh, it's not going to let me go until I question something, until I check something. Don't use credit cards. And a great goal is be debt-free. Okay. So then here's your financial literacy profile again. It breaks all of the 5 areas, and then it gives you a total score. Then it lists the steps that you just said. So if you're a student watching this online and you are taking the quiz, the first question is, what are the 5 areas? And you can see those listed right there. Okay, and then this last section is just a survey of your own feelings. Do you feel more informed now than you did starting this? Do you have more knowledge? Was this easy to complete? If it's not, then we need to make it easier. So, okay, for those of you that will be watching this video and taking this quiz online, we talked about the 5 areas of the financial literacy inventory. Know the difference between gross pay and net pay. Discretionary income, how much should you have in savings? This much to this many months. What's it called when you use a credit card and you don't pay that bill off on time and then they charge you this? Which is the least risky, which is more risky? Savings accounts, savings bonds, money markets, stock market, be able to tell that. And then what's it called with auto insurance? If you have a break-in your car, what kind of insurance should you have had in order to pay for that? So those were the things you'll want to watch this video for. So, okay, I appreciate you guys coming today. Thank you so very much. If you wish to take this assessment, stop by our office. We have paper copies. We also have online copies.